Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. We just got the release of retail sales from Canada, coming in stronger than expected, 2.2%. I do have dollar CAD up on the screen here, challenging the monthly open, also structural support, also the weekly opening range low. On a break below this, 32.50 would be the next downside target. I wouldn't go chasing it just yet, but certainly topping expectations with a print of 2.2%. X-Auto, if you strip that out, also beating expectations 1.7. Do note that there was a slight downward revision to the previous month in X-Auto core. Headline figure, slight upward revision. So generally a strong print, pretty decent. We also got the release of current account deficit here in the United States, showing a little bit lesser of a deficit than previously expected. Not a major market mover by any means. So with that out of the way, it's good to be with you guys this morning. Lots to talk about on the docket for today. Let me take that step back. There's a lot to talk about, but it's been pretty slim pickings to start the week. As we've been noting for the last couple of sessions, sorry guys, hope the mic is good here. The start of the week has been pretty slow. You know, a lot of the price action doesn't really start to materialize till Wednesday, Thursday prints, and then you really start to pick up. So a good time to gauge the weekly opening ranges, a good time to really map out your levels and have a game plan moving deeper in the week, and expect things to start picking up. So with that in mind, we'll go over the DXY, which is obviously breaking some key levels here. Sterling CAD, and Kiwi CAD from last night. Sterling CAD and Kiwi CAD, Sterling broke a big region to the upside, okay? So actually British Pound is the top performer so far on this session. Here's what the relative performance looks like heading into the U.S. Open. You got the Sterling up 0.76%, Euro up 0.59%. Sterling obviously, you know, counterintuitive. We were looking for the pullback off resistance to get long. We sat at the initial support that we cited last night for a while, even came back an overnight trade to tag it before rallying through. So the British pound, obviously, you know, this news of April 29th being the day that they're going to start the summit talks for the Brexit has really, you know, a lot of people were shaken out of that, thinking that that was going to move Euro or Sterling lower. Counter move is typically how these things play out. So we'll take a look at the British pound and the pound crosses. Kiwi CAD, not too crazy about, but still holding that resistance. I highlighted that on Daily FX yesterday as well. Dollar CAD, Kiwi dollar, Aussie CAD is still very interesting to me. And then we'll go over Aussie dollar and crude prices as well as gold. So crude prices, I can't stop staring at that chart, guys. You know, I even noted yesterday in the webinar, I think, you know, there's still some upside potential there, and there's a lot of people who are still pretty bearish. So makes me feel pretty good. Silver also says, Sarub, you got it. Let me put silver on there. You know, I was looking at silver, Sarub. My issue with silver on the intraday chart, it's so choppy. There's a lot of back and forth in it, but the broader structure that we've been following through from like 3 weeks ago is still in play. So we're coming off that support. We'll talk about that in a moment. All right, let's jump right in. If you guys have any other questions or trade setups you want to review, as always, feel free to jot on the message board. So let's jump right into the DXY. Some interesting just notes here. I was looking at the you know, Fed Fund futures moving forward to see if we've seen any material shift in what we've been looking at as far as expectations for interest rates. There has been a slight downward revision on some of these guys, but certainly the broader focus is still for 3. If you look at this right here, obviously heading into May, or no one's really expecting anything. It's really the June print is the next quarterly read, 56% chance, much, much lower than we were expecting, you know, 2 weeks ago. Now sub 60. So that's not to diminish the expectation, but certainly softening a bit as prices moving lower. And this is what people don't get. A lot of people will look at Fed Fund futures and they'll staple it and say Fed Fund futures are saying this. No, the futures will move alongside with price. So here we're seeing a little bit of a softening as you get kicked out into the next quarterly meeting, September and December being the big ones. You know, if we do get that hike, September has softened materially as well. Okay, now you're only looking at about, what, 40-some%. and December is obviously still pretty solid, above 50%. So, and the way you do that, guys, obviously you just add, where we are in interest rates, the expectation down the road, add these together to get the summation of what the markets are pricing. So at a 1.25 to 1.5, which was the general consensus that we were looking at in the dot plot, we are still looking for that towards the end of the year. So the markets are still broadly expecting 3, a little bit softer than previously expected, and you're seeing the dollar price that in. So it's not, completely outside the realm of possibility for anyone who's really shocked by the dollar decline. We've been looking for it. Now, daily chart, here's what we look like. The trend line or the slope line that we're breaking right now is not really a major pivotal slope line, so I have it in dashed here, but if you extend it off the highs here, pretty much caught the lows, and it converged right here on the 2015 high day close. Okay, and we talked about that level at 100. We're sub 100 right now. Here's what it looks like on the intraday chart, but I wouldn't get too excited just yet. I still like the downside. Obviously, we're going to bring down our bearish invalidation level to the weekly high at this point for the near term, but this does complete a 1618 extension off the low, and it's also a former swing low from earlier in the year back here in January. It's, is it the January low? No, it's not the January low, but it's the January 25th low. In any event, 99.78 near-term target could see a little bit of a rebound. You're seeing divergence in momentum, so I'm getting a little scared. If you're holding short exposure at this point, I'd want to take some off the table. I'd want to bring my stops in. Expect a little bit of a rebound. Sub 100, I still think this is good. So if you rebound to the U.S. trade session and you find resistance here, if you're holding shorts, that should be very encouraging for continuation lower. Again, basic technical analysis, break as support, test as resistance, wouldn't be outside the realm of possibility before the next leg lower. Bottom line, this is still the pivot point. So on a daily basis, if we do close sub 100, I still like dollar index lower. If we close northbound of 100, expect that near-term rally, or expect that near-term relief or recovery or rebound. Ultimately, we'll be looking to sell that too. But just note the risk that you're running near term. If this thing wicks back and closes above 100, it could just be a pro below support on divergence. Wouldn't be outside the realm of possibility. Again, the broader picture remains bearish below the weekly highs at this point. If we do break that, you'd expect more of a concerted rally towards 100 spot 88, maybe 101. Again, this is not our base case scenario, but another region of which you'd start to look for re-entry on the short side if we do break higher. Ultimately, right now, I want to see the U.S. trade session hold resistance right here near 100. Questions on the DXY? Largely the euro dollar, 60% based of the index, so keep that in mind. And we'll take a look at euro later in the session. Okay. As far as U.S. data is concerned, moving into the end of the week, you still don't have anything until like durable goods. Existing home sales is on tap heading into tomorrow, so do keep an eye on that. We'll cover it, or we'll give you a heads up on that before in the webinar. It's at 10 o'clock. But really, durable goods is going to be the major print. This is a preliminary read for February on Friday. Okay, DXY, number 1. Number 2, British Pound. Best performer on this session so far. Here is what sterling looks like. Again, this whole Brexit talks being, finally the summit being set for April 29th. There's been headlines crossing all day long about what that means and what that means for the EU leaders. Obviously, there's been, all kinds of summits that have been scheduled and whatnot. Largely speaking, we're following price. And the whole thing was near-term support at 123.45. Here's what we looked like yesterday. Okay. We were coming into, let me show you the daily chart first. We were coming into major resistance right here at the 2016 low day close. So this was the spill that you made in October. The close of that session, 124.33, has been a pretty decent pivot in price. We've been watching that for a while. Add to that basic trendline resistance off the highs of the year, the 100-day moving average, and all those coincide right here. You even had this slope in purple. I talked about this in the webinar yesterday, this larger slope, which is just former channel support. We've been pivoting on it for quite some time, also converging. We couldn't close above it. Here's the pop. Now, today's close will be important, just like it is on the dollar index. You know, as I said, at that 100 mark, so we'll be watching this to see how it performs, but certainly on a topside breach, if we close above this, you know, gung-ho. Everything looks good for continuation into the median line. Now, this is an objective break of the weekly, the monthly opening range highs. So again, forget what Mike Boutros says or Jamie says or anything. Just looking at price objectively, we've made a complete round trip of the start of the month, and we just broke the monthly highs, a near-term resistance level. Keep it simple. Momentum looks pretty good and well gauged here. Again, this is bucking the trend against what everyone thinks is going to happen because of the Brexit, which only adds fuel to the fire of the washout. So as we noted last week, I'm pretty excited about the pound and the pound crosses in general moving forward. Also note that, you know, I'm just looking at positioning. Sorry for the quiet for a sec there. I'm looking at positioning. We now have access to IG's version of SSI, which is what FXCM had, which is actually a larger pool at this point. And we can see positioning on that, relative positioning on that shows a 30% drop in the traders that are net long from last week. Okay. At the same time, there's been a 45.6% pop to the upside in the number of traders that are net short. So there's a little bit of a concern here, or actually I should say the exact opposite. It's more fuel to the fire, right? If you're a retail trader, you're kind of trying to fade this move. But for us, from a technical standpoint, that's fuel to the fire that traders are trying to fade this move right here. You might get a lot of jackknife back and forth, but that just suggests that, you know, once this thing continues to climb, that domino effect is going to cascade. Once those guys get washed out, you got another leg higher in pound. So I do like the upside. Okay, long story short, where to get in if you're not already long? Here's what the intraday chart looks like for cable. On the 240-minute chart, just wanted to highlight this is the structure that we've been working with. Here's what it looks like now. Okay, we'll get deeper into price in just a moment, but just to keep things pretty simple, you know, basic support 123.45. We talked about that as being the initial support last night. We came right into that again in overnight trade. We sat in it for a while, and then there's the pop taking us through the weekly highs, 2016 low day close, initial target 124.77. We just scratched it just below. I think the high is 24.73, okay? And then we pulled right off. So look, you want to look for support while above the weekly open at this point. So 23.90 to 24 is what the max low should be if the breakout is legit, okay? And you'd look for this thing to close northbound of 24.33 to really confirm the breakout. So subsequent targets, really 25.78. You got room to the upside. I wrote 25.65 into 78. 65 is actually the 764 retracement, so just range there. I don't want to get too nitpicky with the pound. And then basic or larger key resistance is going to be all the way up here. So you have room. Initial support on a pullback if this is going to be a legit kind of breakout trade. Like I said, you want to keep support, or you want to see this pullback hold here. Obviously, a break of the weekly opening range lows, which suggests there's a bigger recovery. And this could be the same type of thing that I was looking at with the dollar index, guys. It could be a blow-off high near term. And this is the pound, and this is, you know, exactly what the pound does. This could be just a near-term blow-off to the upside, a breakdown. Everyone starts to think, okay, oh, great, resumption. Now everyone's going to, and then as soon as it starts coming into the two levels that we talked about yesterday in the piece, i.e. 2310 to 2270, this region, you know, all of a sudden, you know, it just rockets through. And I don't mean to be wish-washy on this. From a positioning From a trader, if I'm flat from here, I'm looking for a pullback into the U.S. trade session to find support here. I'll be looking for triggers against the low. If that never materializes, again, I'd be waiting for a drop into this zone to get long. If this does hold and we get a decent trigger, you're looking for a close northbound of 24.33. It's really, the level to beat, in my humble opinion here on the pound, to confirm more of a breakout here. Okay, and there's that slope. Very basic channel. Any questions on sterling? Mike, there is another resistance trend line from the top of the September 16th. Would you give it any weight? September 16th. Okay, so you're looking at this one. Yeah, I'd give it weight. Why not? Sure. Just off the highs? I mean, you didn't get that relative touch here, but that was the monthly open offering resistance here. Yeah, I'd take a look at that. Here's the one thing I would say, Mike. Any 2-point trigger line for me is always, it's relative. Remember, 2 points speculative, 3 points confirmed. Because I could take any 2 reference points and make a trend line, anything. I could take these 2, I could take these 2, right? And I'll be looking at trend lines all day long. I'll cover my chart in trend lines. It's really the third relative touch that makes it important. So for the trend line that I was looking at, we did touch it yesterday. We literally came right up into it and closed lower on the session, which was why I was thinking you get a little bit more of a kickback before rallying higher. So this trend line here was confirmed, and that's why I'm looking for the underbelly of it to offer some support on a pullback here. Does that make sense? He says, got it, Mike. Makes total sense. Cool. And not only that, one other thing I want to say, Mike, is that I'm not going off of just this trend line. Remember what we just noted. There's lots of technical significance at this region, right? The 2016 high day close, the 100-day moving average. So because of the confluence or the convergence of those technical considerations, that's why it's important. So always keep that in mind. I always look for these trend lines that are 2-point touches to converge on something before I actually start to chase them. Otherwise, like I said, the merits of it are kind of wish-washy. They could turn out, and you could have front-run a nice trend line, but generally speaking, that's just a rule of thumb. So, Mike, cheers on that. I hope that helps. So, any questions here on the British pound? Again, look for a pullback to find some support into this zone. Continuation through 24.77 really presses this higher. Keep in mind, 24.77 is a key 618 fib. So if this thing is just a quick washout, that's a decent region of which to find some resistance. So if you're holding immediate longs, watch 24.77 here. You need to clear that to get continuation higher. If you're looking for exposure, I'd be looking for a pullback towards the monthly or weekly opens here initially. I want to see that hold as support to favor any upside. Keep in mind this retracement is null and void now. We've made a new high, so I can't with conscience show you this because I have no way of knowing this is a high. But just as a consideration, look where the 38.2 basic retracement comes in at the weekly low. So again, we can't do this because we don't know that this is a high, but just as a reference, once we do get any type of pullback, that's the retracement you want to gauge for support. All right. Questioning this pound rally here. Let's see if we can hold above channel resistance. Getting divergence into this high, so watch out if you're holding long exposure. Pullback, weekly open, monthly open support. That's sterling. Going once, going twice. Sold. Oh, really quick. I do want to also just take note. Here's what the CPI numbers look like from the UK this morning. Beautiful. Brings to a 120-minute chart. Obviously, it fueled a big part of the rally here, but year on year, remember for those of you who were in the webinar yesterday on Daily Effects, you remember we went over the exact implications of what this entailed. We were expecting a strong print. So the impetus was if you got that print or weaker, okay, the market might actually fuel a pullback because we were expecting a big pop from 1.9 to 2.2 on the year on year. And even if you take into account core, we're expecting a 1.6 to 1.7 pop, and core is the really main one. Well, guess what? We topped all the expectations, or I guess I should say the UK topped all the expectations. So, you know, fueling this leg higher. One of the reasons, guys, I'm reluctant to issue or be comfortable with any new long dollar or sterling exposure up here, because if this is just a pop through on data, quick washout, pullback could be pretty nasty. Again, ultimately we'd be looking to buy, but watch that 24.77 near-term resistance. All right, and that is British pound. Heading into the end of the week here on Thursday, you do get some retail sales data. Do keep that in mind. Again, we'll go over that tomorrow in the webinar. Okay. Sterling CAD, number 3. I'm just going to touch base on this really quick. Not really involved in it right now, but I did want to bring it to your attention. Here's the update from last night. We've been following this one for weeks, and the major thing I was looking at was the fact that we were probing through a major resistance level. Recall that this was a basic monthly opening range. Last week it was also testing the monthly open as the range highs, big region. And here's the monthly opening range highs, which is at the 2016, again, low day close, very similar to pound dollar. You also had that 618. So where the pound is just stretching into its 618, pound CAD, it's probing and failing already. Note the divergence. And momentum is right at the 60 mark. Look where we capped out earlier in the year. This is why reluctance, okay, to get too bullish pound here. Still love the trade, but you're at near-term resistance. Again, we've gotten pullbacks off this region. It's been a very decent pivot in price. Watch pound CAD. This might be the tell, and certainly with pound CAD, the dollar CAD is also in focus. We'll take a look at that in just a moment. But with the breakdown there, if it breaks support, could fuel a little bit of a leg here on CAD strength. And again, you'd be looking inevitably to buy this trade. Still like the broader upside of it. Watch this resistance 65.92. Here's what it looks like on the intraday chart. Pretty mean. Okay, as far as the washout's concerned, again, another pound cross, pretty mean here. We are already, 70 pips off the high. So watch out. That's some ongoing divergence. Not the strongest. This is not really technically a divergent signal because it is a higher high. But again, some pretty extreme higher high. Not really seeing those extremes in momentum. A little more subtle, but I would still say the momentum signature looks like it's waning. So, these consolidation formations, not surprising. Topside break gives you a rally. Washout would be on hand. Near-term support, 65.24. Again, sort of your near-term bullish invalidation level would be down here at the monthly open into the 38.2 retracement. Actually, at this point, I'm going to raise that. Ooh, that is sexy right there. Okay, so that is the monthly open dead on with the 38.2 retracement now. That's 64.64 or 64.63. Okay. So actually a candidate which, guys, if you get a little bounce in U.S. trade, I actually wouldn't be too opposed to trying to take a short side on this from an intraday standpoint against the highs. You're already 70 pips off. It's got a bigger, wider ATR, so do keep that in mind. But for a near-term play, might not be against, might not be too opposed at. And again, keep in mind this key region, guys. If we close northbound of 65.92, this thing is done. Your real next target is until way up here. 60. That's basically 68, 67, 60, 68. You got the 200-day moving average, the 50 line, 618 extension off the lows. Big region. Questions on sterling CAD? An interesting sterling cross, I know, but if the setup is there, the setup is there. At risk for a larger washout to the downside here, but we'll be looking to use that pullback ultimately to get long. Last thing from last night, real quick, 1, 2, 3, 4, is Kiwi CAD. We were looking for the pullback, and we're getting the pullback. Here's what it looks like. On Kiwi CAD, I'm sorry guys, here it is. Here's what Kiwi CAD looks like. So the daily chart first. The relative significance of the resistance region that we came into is really what prompted this report and prompted this alert. It's the 2016 open. It's a 38-2 retracement of the entire advance off the April lows from last year. It's the 200-day moving average. There's so much there. And the weekly opening range opened up right into that region. So ultimately, this 94.22, 94.33 region was absolutely critical. And if you did see a topside pop, bigger resistance is up here. Long story short, good region to start, both good regions to start looking for some kickback on an intraday basis. We're getting that now. From a near-term standpoint, here's what the 4-hour looked like last night. Again, highlighting that 94.23, 94.33 level. Near-term resistance, the weekly opening range highs, momentum, scratching 70 here at the upside. So that's kind of where we were at the, during U.S. trade. As we opened up Asia, that's still where we were. You got a little chop up there, but here's the pullback, finally starting to get some downside. Once we clear the weekly open, okay, here's what the near-term picture looks like. Whoops. Once we clear the weekly open, your downside level targets should open up at 93.47, and then this is still key support. Recall the previous report, guys, from the 12th, okay, February. That was our last downside target, and it certainly sat there for, what, 2 weeks? Basically, it's the monthly low at this point before rebounding. So my point being is, before you start looking for ultimate collapse in Kiwi CAD, that's still the big region. Right now, we're testing the weekly open. Again, watch 93.47 is just a decent swing low from back here in February. In fact, it is the February low and a decent pivot. So that's right here at 93.47. But looks pretty good. Looks pretty good. Here's the 120 and how it looked like last night. Any questions on Kiwi CAD? Not really much to say here. You're at your first near-term target. Look for that push through 93.47. Again, key support into the figure. Now, by the way, if it comes into the weekly opening range low, 93.47, this region right here, and it holds, I would count that as just a basic turnaround on the weekly opening range, and then you'd really put the impetus on this key range. If it breaks to the upside, 95 is still the level to get short at again. So certainly, leave that possibility. If you're holding shorts, as you get into the weekly opening range low, clean that up, take a little bit off, bring your stops to break even or better, and respect a break of that range if it holds into the U.S. Open. Kiwi CAD, number 4. Okay, let's segue into dollar CAD since we just got that data and dollar CAD's making some moves here. We'll jump into Kiwi dollar and Aussie CAD from the previous day's report. So here's what the update looked like on Sunday. We'll come back to euro dollar. Here's dollar CAD. Here's what we look like right now. CAD's making some moves. All right. So, dollar CAD. Remember the possibility of what we talked about and the, what was the discussion about? Leaving trend lines on, even when they start getting messy. Do you guys see this? So, I hate to stress or say that this is what caught it, but certainly looks decent. The pitchfork that we've been working off of last year's low, look at all the slope and how it caught so many swing highs. Here's the lower parallel. Support, 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 messy, but nice pivots. When you went through it, it ran. When you came up against it, it pivoted off. Same thing here, break of support, check his resistance, look lower? I think that's what we're doing. So as it stands right now, you're making it through the weekly open, the monthly open again, and the 100-day moving average. Very similar situation, which is why all these weekly opens has been like a thorn in my side. You know, it's still early in the week. This could suck right back up ahead of the monthly open before the open or before the close of trade today. Keep in mind your monthly opening range is right there. Monthly opening range lows for March. So before I get, you know, too excited, again, you're still tempting this break. Now, again, put a gun to my head right now, I would say, yeah, it's going to break, look lower. But I just have to bring that up to you guys. From a technical standpoint, all you've done is made a round trip, solidified the monthly opening range, and you're at the range lows. You need to clear this on a closed basis to get this thing going. Okay, that being said, it looks pretty good from a couple of different standpoints. Even your momentum signature here, you know, if we close at these levels, would be a technical break of a 3-point trigger. 1, 2, 3. Oh, that's not a point. Oh, here it is. 3, 1. Okay. So to our earlier conversation, Mike, when we talk about trend lines and using those, even when you're using them as triggers in momentum, same type of rules apply. So again, you know, it's the hallmark is there. The writing's on the wall. We just need price action to follow through. Here's what the intraday price looks like. Okay, there's the formation that we've been following off the lows. Again, too clean for comfort, really. Median line, catching some nice pivots, the origin of the breakout, or at least participated in fueling additional rally in the breakout. Here's the 50 line, resistance, resistance. The monthly open, we talked about this level converging on the lower parallel. Below this region, you're still at risk for further losses. To solidify or validate the break, we need to get the close. Okay, so like I said, 32.51, as I was noting earlier in the webinar, as we got that data as your next downside target here. Look for channel support. Okay, again, it's only a 2-point touch here. It's only a 2-point touch here, but the slope has been identical. So that's something I'll give merit to. The fact that this is just a parallel. All I did was take trendline resistance, take a parallel off the lows, and you can see really nice touches. So look for support, 32.50, depending on where you are in time. Look at that lower parallel. Okay, and then 31.85 would certainly be a zone I'd expect a much bigger bounce. Not only is the 618 retracement of the advance off the lows, but you also have these former swing highs just above. So watch 32 is sort of the major key floor here, but that's sort of my thinking here as we head into dollar CAD. Questions? We do have inventories on tap as well tomorrow, so keep that in mind. We'll take another look at where we are with crude in just a moment. But certainly dollar CAD trading heavy, at least near term. And you know, I don't want to keep bringing it back, but I'm going to. You can envision a scenario where what we talked about in the dollar index starts to materialize. I wouldn't want to see that here. You know, if the dollar index does give that washout and all of a sudden bounces higher, I don't want to see that exposed in Loonie. And Loonie is only a very small portion of the dollar index. So I wouldn't, even if the index bounces, is what I'm trying to say, I wouldn't necessarily wash me out of a dollar CAD trade. All right, questions on Loonie. Going once, going twice. That is number 5. Kiwi. Looks like this. Actually, it looked like this earlier in the week. Here was the weekly open. We talked about 70.37. 70.46 was our bearish invalidation level. It popped through. And not only did it pop through, it held as resistance. So you're no longer bearish. That's my point. Here, or it held as support. So you're no longer bearish. Here's what Kiwi looks like, at least on the near term, on the intraday. I would need to see this thing go back sub 70.36. Same rules apply, guys. Basic. So this was resistance and near-term bearish invalidation. We talked about it on Friday. It was a nice kickback. So you got a nice short off that. You rallied right back into it into the close of the week. You popped through. It's been serving as support ever since. Not much to talk about with Kiwi except for the fact that you have the RBNZ on tap, and certainly the range has been contracting and super tight. So you do want to be mindful of that. What else can I say? So the meeting is tomorrow for the RBNZ. I don't really want to front run the trade. If I had to get involved with a Kiwi trade, it'd have to be Kiwi CAD at this point, just because I think the technical merits are clear there. But the levels remain unchanged, guys. They're exactly the same. There's really not much new to update here. Look for a break of the weekly opening range. Here's your weekly open and weekly opening range low, 70.10. That would sort of give us resumption, certainly for the downside targets. But as long as you stay northbound of this region, the 50 line's ridiculous on this. Look at it on the 4-hour, guys. This 50 line is just sickening. It's not even a 50 line, but this slope right here. The broader parallel that we've been working with, okay, I guess let me zoom that out so you can see that. This is from the high that we made in September, the high that we made in February, and the low that we made right here in December. Look at these slopes. Perfect touch, perfect touch, perfect support, perfect resistance. Now that we've broken it, go into the 120 and get a little deeper. Broken it, perfect support, perfect support. So as far as the levels are concerned, just work them, okay? If you get a downside break, again, back below that parallel, look for a drop into the weekly open. If you get a break above 70.75, you know, gung-ho, 71.30 is on tap. Questions on Kiwi dollar? Don't get too aggressive in the head of the RBNZ. I'd be light on this trade for sure. But I do expect that we'll see a surge in volatility heading into tomorrow afternoon. So we'll revisit this in the morning. Aussie CAD's last update before we get into some of the other majors. Here's what Aussie CAD looked like. Just a quick update on this one. Okay. And the only thing I want to look at here is that we're getting the turn-off resistance a little bit, you know, after probing through. I wasn't expecting it to get quite as high, but it did. Here's what Aussie CAD looked like. We were talking about this earlier in the week. We were saying, look, you have structural resistance backed closely by 103.11, 103.08, a great region if this thing is going to turn to look for a real crazy mean reversion trade, especially with the momentum profile doing what it was doing. It was sub 70 here, couldn't get much upside. You were getting divergence ahead of this last high we were making. You were getting divergence, and you know the exhaustion trade looked like it was just a hand-me-down. You had the 100% extension and an 88.6 retracement overlap. A nice zone. Now you maxed through it. Okay, give me a little bit of a pad here. 103.30. So you went 20 pips higher, but there it is. That was it. Last gasp of air, and here's the washout. I'm not going to go full-on bearish, but certainly you want to be able to identify these things. And when the exhaustion trade is apparent, it's a near-term opportunity for sure. Now the pullback, what's going on with that? Here's the monthly opening range highs. Let me highlight it for you. It's initial first target, and that will be 102.54, 102.53. Got another probably 20 pips to the downside or so. So that's going to be sort of your initial level of which you'd look for some support here on the Aussie CAD reversal. Near term, here's what it looks like now in the 4-hour. Okay, and here's what it looked like earlier this week. Okay, so we probed through this, pulled back. Again, weekly open is going to be sort of your initial area of support. Coincides pretty darn well with that level that we just cited as the former highs, 102.53. It's right here. Let's put that here. Okay. And then the 50 line should be something that you respect, 102.30, depending on where you are in time. That's going to be a variable. We'll go ahead and readjust our fibs real quick. brings the 236 into the monthly open. Ooh, all which converge on the lower parallel. That's nice. Not bad. All right, here's the updated sort of slope here on the intraday chart if you want to take this for reference. I don't have the... Nope, it's all on there. Again, feel free to take a snapshot of this if you need it, but sort of the game plan I'm working with. Look for initial support at the month at the weekly open at that 102.50 region. A break below that, I'd feel much more comfortable with this near-term reversal towards the lower parallels. Questions on Aussie CAD? Quick update there. Number 7 on the lists. So Aussie dollar, this thing. Haven't given an update on this in a couple of days, so I just wanted to bring up the fact that the weekly opening range is struggling to hold below the 2016 high day close. Here's what it looks like on the daily chart. Every time we come into this region for Aussie guys, you know exactly what I think because I've told you this probably a million times. You know, like every time we get into 77.30 into 77.80, you know, it probes through sometimes like it did back here. I thought this was going to be a full-on massive breakout. We closed above it even, but then we pulled back. So we stretched that region that we were looking at from 77.30 into 77.56 all the way into the 78 region just to open it up. And like here we are again. I can't really stress how pivotal that region is. So if you're asking me, Mike, what to do here, I'm saying, look, you got to look for a near-term exhaustion. Okay, even on a wave count, looks like a 1, 2, 3, 4, 5 to me. But even on the divergence, price action, lower peak, lower peak, lower peak. This is a higher high in a close basis. You're still making lower highs in momentum. So I can't like the long side anymore, period. Which is why I don't really know what to do with Aussie. Look, if you put a gun to my head, I would say if it pops through, I would fade a rally into 77, 78 again. But seasonality's turned bearish as we head into the end of this month, start of next month for the dollar. So that would fuel further upside. You know, it could be the breakout, and I don't want to be the guy trying to short on the breakout of the Aussie. So long story short, I'm on the sidelines for Aussie dollar specifically. If I had to trade an Aussie cross, we went over some of those earlier. We went over Aussie CAD earlier. We can look at some of the crosses, maybe even Euro Aus, but it's tough for me to favor the long side here. I'm still of the mindset that you have to look for a little bit more of a correction near term. A pullback towards 76.50 would be a gift, in my humble opinion. Basic slope support, the monthly open, a 38.2 retracement, pretty decent pivot in price. Okay, caught some nice lows here, and then the breakdown. So area of interest for long exposure on a top side breach, you know, 78 is just so critical. This is just a huge region we've been unable to clear for a whole year. So a little hesitant on the Aussie. Wish I had a better take on this. Hey, Pete, I'm sorry. Did I miss your question? What's a good entry point for a long position? Did I get that? I'm not sure what currency we were talking about at that point. Okay, cool. All right, so that's Aussie dollar. Let's move into some of the commodities. These are juicy trades. Here's crude. I can't stop staring at this chart. I just like it, you know, what we're doing here. So you guys have seen the weekly many, many times. But just to recap, and by the way, remember we noted last week we made an outside reversal in pound on a weekly basis, which is obviously a near-term constructive thing. But here's what crude looks like, and the reasoning behind the near-term, you know, long call in crude. We talked about this, you know, at length for weeks now. Basic 236 retracement from the advance off last year's low. You have the 52-week moving average. You have the 50 line of the current operative structure that we've been following Not only have we been following it, price action has been respecting it. So there is a lot to look at here. We're not turning full-on bullish, but we are looking for a bounce off support, and that's what we're getting. You don't want to get bearish on a breakdown when the breakdown is testing initial support. You want to look for that rebound to get back in the short side. So for us near-term guys, we're playing the rebound, and that's what I think you need to be focused on. Ultimately, you're counter-trend trading here. This was a break of the yearly opening range. This was a hallmark triggered momentum. This was a break of former support, former resistance. So yeah, the thing looks still bearish. You had divergence all up into that high, but you have to respect the near-term bounce and support, and that's all we're doing right now. So to get back to the daily chart, and I'll show you the intraday, which is really, really clean, oddly. But here's what the daily chart looks like. Just some basic slope analysis, taking these slopes off some major key lows. Nice touch, nice touch. That's a 3-touch or 4-touch on this one. It's kind of where we're dilly-dallying right now. It's also the 50% retracement of the advance just off that near-term rally from November. You got the 200-day moving average in there. It's a chop fest. Okay, so the daily chart does suggest that you could stick around here for a little bit. Again, slight divergence. Bring it into a line chart to identify it easier. Price action with a lower low. The oscillator with a higher low. Both reference points sub 30, a weak signal, nonetheless showing divergence. You're back above that 200-day. Look for a push through that close high that we made. So basically 49, okay, would suggest near-term reversal, and the pop would give us just the recovery. Ultimately, counter trend. You'd be looking to ultimately sell that, I think, but near term, you do need to respect the rebound. You do need to respect the rebound. Again, let's look at the intraday chart, and I think this is where most of the juice, this is what I'm focused on. Can you have a look at sugar, Vlad? I don't think I've plotted sugar since my early days learning technical analysis, but I can certainly take a look if we have time, Vlad. So here's the intraday chart, and this is kind of what I'm focused on and why I've been really turned on to this trade as of late. Again, we talked about this probe last week. In fact, this is when we first highlighted this chart. If we go back to the crude chart from the previous session, okay, this was back on the 16th. We talked about the fact that the touch on the 618 was just ridiculously clean. This was a chart that we had highlighted even earlier on the radar charts, kind of looking for that major key touch of support. Well, we got it. The pullback came. We tested that 49.60 region, near-term resistance, former swing lows. Still the level to beat. Still the level to beat. We came off that region. A pullback has now given us a decent slope. You have some nice inverse symmetry here. Support, break gives you the breakdown, now resistance. So a nice slope to work with. Highlights a still constructive near-term bias while above 48. That's sort of where you'd need to break down to mark resumption of the near-term trend. Okay, I think still you look for possibility of stretch higher near 50, 50.34 specifically, excuse me, would complete a 100% extension. This is where I'd like to start look for some short exposure back on the crude trade. And that's just my thinking. I mean, even on a near term, if you take this into a little bit even closer of a view, here's a 60-minute. Here's your weekly open. Okay, your weekly open is set. You make a new low. You test the weekly open as resistance, and you get some pretty decent kickback off it. And then here's the plow through. Right? So you could say that this is your initial weekly opening range. You want to look for support here, bullish invalidation here, ultimately looking for a stretch into 50, 10, 50, 34 be a sweet spot for me. And again, bucking the trend. No one's looking for that, and that's why I think it's a good one. Questions on crude. And that coincides with some CAD strength, right? Dollar CAD breakdown, Aussie CAD, maybe get the pullback. It all matches pretty well in my mind. Questions on crude? Oil looks like a bear flag on the 4-hour. Could be a bear flag, sure, but even the bear flag would give us the correction near 50 before it collapses. In my humble opinion, it would still be respecting the broader technical conception of a bear flag. Sure. And also, we have to leave the room for the fact that this could be just your median line test of resistance after coming off support and then slam lower. In any event, that still puts the impetus here on the 48 level as that channel support, as the 100 off the high that was completed. Actually, at this point, I'm going to delete that. But the basic 618 of the range that we're still holding. So even if it is a bull flag, we've got that key support level of which if it breaks, Mike is going to consider or validate the continuation of the broader downtrend. Until that gives way, man, we have to be mindful of this rebound. Okay, and next up on tap is gold. I got some gold on gold, guys. Here it is. Again, back to the weekly charts to start off. Gold has been looking like a nice rebound as we turn just ahead of that 1193 target. We talked about this at length, so I don't want to get too in-depth since last week because we already covered last week's price action. But just check the weekly chart. The level that we're coming up on is a level that we've been highlighting, 1233, 1234, the weekly high reversal close for the year. I know it's a mouthful, but it's basically the high week close, and it was an outside weekly reversal. So it was a very significant level. You can also match it back over here to the April highs that we made, or the May highs that we made back in 2015, which was a multi-month high and was respected as the high into the end of the year. So a big region, right, for gold prices near term. Excuse me, going back to the daily chart. Slope off the lows. Guess what? Perfect support. That's there. The down slope off the highs. Perfect support. Breakthrough was a rally. The breakdown was a breakdown. Resistance, resistance. Breakthrough was a rally. Breakthrough was a breakdown. Also in this region. Go even deeper. Here's your intraday chart. Okay. Median line off the highs. Resistance, resistance, break. A little bit of a messy support test there, but it puts the emphasis on this key range still. Okay. 1229 into 1237. Even if it maxes the highs, I don't want to get too excited ahead of that 618. But you get the picture. Waning momentum. Could see a little bit of a breakdown. Would coincide with a near-term rebound in the dollar. Ultimately, I do think that you still want to buy a pullback in gold. Could be another 1, 2, 3, 4, 5. And the easiest way to find Elliott 5-wave patterns to the upside is to look for the extended 3. 3 should always be the longest wave, or the most, what's the word? The most severe, strongest part of the advance. So by identifying wave 3, really quickly you can be able to see, okay, well, we haven't made a new high 4, or there wasn't really a clear 1 yet. And then once you've identified the pattern, guys, it just helps. Levels to buy pullbacks in gold. So like I said, as it stands right now, you don't have a high, so I can't really tell you that 1215 would be my ideal spot because I don't know. In fact, we're pressing a new high now as we speak. So look, initial support, like I said, is still going to be 1230 right here. If this is just a pullback and continuation, that's the first area you'd look for as support, Saru. But once we make that pullback, then tack on a quick retracement and see where a considerable fib or a meaningful fib will converge on this median line. Or excuse me, this median line here. Does that make sense? See the touch we've got there? Boom, boom. I want to see where there's a retracement that'll converge on that. Right now it's the 50, but again, I don't know that this is a high. This means nothing. I'm just doing this as a drill with you. But that's how we always will approach this. Once we've made that turn, we've made either a break of, let's say, the session opening range lows for the U.S. trade session, or we've gotten a more considerable pullback, then I'll tack on a retracement, look for where it converges on one of my median lines, and that'll be my first target on the pullback, and an area of which you'd look for a long. Does that make sense, Sarub? So for example, just plowed through right here as we're speaking. So these fibs mean nothing. They only mean something when you have a high and low in place. I'd be looking for resistance right here. Let's see if there's any waning momentum. Here's the 1 hour. Here's the 30-minute. Yeah, you're getting to overbought territory here, so I'd be watching out. 10-minute. 5 is through the roof. Watch for the initial reaction, and this is how I'll trade this. You know, if I'm looking at a 5 or a 10-minute and I see this thing draw back dramatically, that screams exhaustion, as soon as you get a pop higher, you want to try to take a short against that high. But if we spend time here, okay, and then we head into the 9:30 block in the next 4 or 5 minutes and it presses, you know, be careful. Be careful trying to chase it. Hey, you're more than welcome, Sarub. I appreciate that. Okay, I got to run through this. So next up on tap, that's gold. You know, broadly still liking the long side. Watch for exhaustion near term, but the levels still look pretty damn good. Silver for, I'm not sure who that was for. Is that also for you, Sarub? Here's what silver looks like. You know, again, the only thing with silver is just it's so damn chopped. But the structure we've been following off the lows has just continued to hold. You know, I can't bitch about it because it's just so clean still. So here's the lower parallel. You got the hold. Here's the breakthrough. Again, basic slope resistance off the highs that we've been following. Looks like we're back above that. I think you need to respect the upside while above 17 still. Next upside target at this point, 1764. I would still keep this as a major target. Obviously, depending on where you are in time, leave a little bit of a room here for the median line touch, which has been very, very clean. But certainly, you want to stay constructive above this region. Topside targets on a major stretch still unchanged. So Sarub, feel free to take a quick pick of that setup. Constructive above 17. At this point, I do just want to take a look at this. Watch this trend line. Okay, it does come just shy of that. I thought it was going to converge on this. Okay, so I'm just going to keep that there as a reference. It's only a 2-point trigger. We just talked about this kind of stuff, so it's worth just keeping an eye out for now as we look higher here in silver prices. Hope that helps, Sarub, on silver. I just hit the whole mic off my face. Sorry about that, guys. Hope I didn't blow anyone's speakers out. Okay, sugar. It's an interesting one. Who was the sugar trade for? Pete, was that you? Vlad, I got you. All right, I'm just going to go on the fly here. It's been years since I've looked at this. I know Jamie takes considerations of the commodities, especially the soft commodities, a little more. Nice symmetry there. Nice symmetry there. See if we can dress this chart real quick. 100 gives you a little bit lower. 618 hasn't come in yet. We just broke it. It's a pretty big zone. This is going to get messy, but just bear with me. I do want to see if there's any merits to this. Okay, it's not the cleanest, but so this is the March opening range low. We'll use that as resistance. Comes on the 50 line pretty decent. A downside break. I mean, this is still, I think, sort of like your major level. My favorite confluence Fibonacci levels, 100 off the high, 618 off the low. These are always going to be, in my humble opinion, the best plays, and typically for me have been my most profitable trade. So there's even a pivot here in price. If you look back, the highs that you made back in 2015, specifically in December before the pullback, the break, and then even the top side of that zone offering some support on a pullback here back in May. So certainly a big, big region. That's sort of your major downside. At this point, I do want to just say you haven't made one close below the November lows yet. So, this could, whip back towards 18, but I would still say that this is sort of where you'd want to stay bearish below near term. So even on a rally, I'd stay bearish below that. 1682, 8150 would sort of need to be the next breakdown zone to get that clip into 1520, 1540 here. But that's what I'd be looking at near term here. Vlad, on sugar. I guess I wouldn't say near term. This is a daily chart, but I hope that offers some clarity. It says, thanks a lot with an exclamation point. Cheers. Interesting trade. Hey, I'm always down. Bring up the obscure stuff, guys. I'm always down for a challenge. Just let me look at this really quick on a 4-hour block. See if there's anything interesting from a near-term standpoint. Okay. Yeah, see the median line even on the real super near term. We'll give you a highlight of the spot right here, heading into the U.S. session. Again, your former opening range low for the month. Ooh, and the lower parallel, which finds you at support, so actually does grant you a little bit of a bounce. Highlights 1681, 1682. Not bad. Not bad. Hope that helps, Vlad. All right, guys, with that, I actually got through everything. It's a little over on time, but I want to thank everyone who joined for today. I'll have this archived and up on SB shortly. And a quick side note for everyone who signed up for the beta SB signals, we will be having a webinar next week. It's likely to be on Monday. I'll put that on the message board as soon as we solidify that with Jamie, where we're going to go over the ins and outs of what the signals are going to do. How they work, and if you opted in for that, shortly after that webinar, we're going to go ahead and turn them on. So definitely looking forward to that. Really looking forward to all of your feedback, guys. It's really going to be critical in the first couple of weeks, but we're really excited about it. Me and Jamie have been getting the signals for the last month and a half, and they've had some really great trades, especially on these knee-jerk reactions where the markets sort of beg to be faded. So we're going to walk you through that early next week. We'll go ahead and turn that on. And again, keep your calendars open on Monday for that webinar. We'll have it in. Steve and Mike Schneider asking how do we opt in. So we're sending that information out. Listen, if you want to opt in, send me your email right now. Just send an email to info@sbtradedesk.com with beta in the header. If you do that within the next 20 minutes, I'll just add you onto the list real quick. Again, this is just the beta version, guys. Obviously, this is going to be integrated into SB, where you'll be able to go in there and turn all your gadgets in and off on yourself down the line. But just to get this thing started, we do want your feedback before we start, really promoting that product. Yeah, Steve, if you sent it a few weeks ago, I got you on the list. Actually, I got you, Steve. I remember your name. You're on the list already. It's not that you haven't been dropped off. It's that we haven't started it yet. We just wanted to compile the list and get enough time to make sure all the beta users wanted to filter in. You will be able to turn off the signals, guys. That's something that Jamie will walk you through on the webinar. So if you do get bombarded or you want to turn off the signals during your nighttime, rest hours, if you have such hours, if you're great, blessed enough to have such hours, then you'll be able to do that. But we'll go over all the ins and outs of it on Monday. Just wanted to bring it up. Jamie will give you more information on that during his webinar tomorrow. Best of luck trading, guys, and I will see you tomorrow morning. Cheers.